Okay, guys, welcome to today's video. It's a new week, and this is day 32 of our SMC challenge. Okay, so we're just going to be doing basically what are we doing? Today's a new week, right? Today's Monday, and let's do a market overview of this week of what we were going to be expecting, and we're going to be using Bitcoin, the analysis with Bitcoin, so that we have, Bitcoin is the major cryptocurrency that has a very high dominance, right? That tends to control other crypto pairs. So it's the number one. So we analyze BTC in order to get direction and in order to be able to trade other pairs that are not Bitcoins, such as altcoins. So basically, let's do a general market analysis on BTC. Let's see how it has performed. You know that we normally do this. We have done this like twice in the past, where I analyze Bitcoin, just do general analysis on to determine the direction of Bitcoin and what we'll be looking out for during the week. So this is one of them, and I'm not going to be doing something different from what I've taught so far. Everything I'm going to be using to analyze this chart right now would be something I've taught right in the past during the past days. Yeah, so I will be explaining everything and you guys will see it. Now, what did I teach you guys? Number one, you have a trading strategy SMC, but for you to analyze charts, you need to what go to the higher time frame. For first, what are you looking at? You want to get the overall direction of the market, right? Remember when we were talking about order flow and BTC was here? You can see how BTC buys, bought to the upside, and it has done really, really well. Took out all these highs. If you go to my past analysis on BTC, you see that most of them have actually played out, especially the buy, which I'm still holding. The buy from 112, right? You know, there was a time I did analysis of this region, the buy from 112 all the way, right? I'm still holding that buy. Of course, definitely, there's high chance that BTC will keep on going up, right? So we want to do the analysis. Let's get started. So first thing you want to do, you want to go to higher time frame, say the monthly time frame, right? So I'll start from the monthly time frames. This is how you analyze chart in order to wait for market reaction before you react, right? So this is how you do it. If you do not know how to do it, just watch this video. If you don't understand, you need to go back to the previous videos of how I've done the analysis severally in the past. So if you go to the monthly time frame, you see that okay, overall BTC is bullish, right? So let's come closer to the ones that really concern us, which is from where BTC did this dump right here to 73k. It has been bullish, and you can count the months: 1 month, 2 months, 3 months, 4 months, and 5 months. So far BTC has been bullish. If you look at the months, this month just opened this about 10 or 11 days, right? And you can see the month of August, right? If you observe the month of August, what do you observe? You observe that the month of August has actually created a low, right? Actually created a low that has bounced off a previous high resistance. You can see if I draw a line off here, if I draw a line off this region, right, you can see that oh, this was actually a form of resistance. The market hit this price on this month. This was May. The market got to this level May, market pushed down, right? Then the following month, market still tried to go to break this region. It pushed down. Then all of a sudden, July broke the level, right? Broke this resistance level. Now, August, month of August, has come to retest this resistance level right here. Now it formed as support and it has pushed the market to the upside. So for me, I'm expecting August to actually continue, right? Before this 20 days elapse, I'm actually continue. So I want to see what new highs on BTC. It means BTC has created this monthly low. I want to see BTC giving us a what, a monthly high. Remember when the month started, it opened here, it was really, really bearish. When the month of what July closed, month of July closed, right? Immediately August opened, we were going down. It was in a red candle. We're going down all the way till we bounce up from this resistance, and market has been bullish. We have gotten to this point, so I'm expecting August to close way up, right, to the upside. So this is the monthly analysis. We are done. You now understand where the market is coming from and where it's going. So you go to the weekly, you get to see things very clearly, just the way I've been explaining in the past. Right now, you look at BTC. What has BTC been doing? Now take a look at this retracement when BTC retraced here to the downside. Take a look at the reactions. When it retraced here to the downside, take a look at the reaction. Now it has retraced. Look at the reactions. See, one thing about the market is always look at how the market has been reacting in the past. Forget about your bias, what you want to be doing or what you want the market to do. Right? Your decisions to be based on what the market has done in the past, so that you don't get yourselves really messed up. Now, if I look at when market dumped here, all I see is market coming to feel bouncing off a resistance. Remember, I've told you how to mark out key levels. I've told you guys how to mark out key levels on higher time frame, right? I think that was my day 3 or day 4 video when I was talking about directional bias, right? When I was talking about directional bias, if you look at this, what did BTC do all the way when it was dumping? It bounced off this previous resistance that turned support, and you see it bounce. This is weekly time frame, right? Now, if you come to this position, now that's why we got a bounce from off all the way to the upside. We took out this high. Now, immediately market swept the liquidity here. What market did? There was a retracement to this side, right? Where did market come to? It came to fill in this weekly gap you have here, the weekly resistance. You know, when market bounced off this region, right? This weekly resistance. Let me zoom this so you guys will see it. If you notice, this weekly candle pumped aggressively. When it pumps, there was a space between this region and this region. So this was the distance there. Let me use a rectangular tool so that you guys will see it very well. Let me delete this. Right? So this was the space on that week. This weekly candle that did a potential move. BTC only filled it and moved up. That was the reaction it had here. Same thing that happened here. It's reacting here. Now what happened? We saw another pump to the upside, and BTC also created this weekly gap. Now when BTC was coming bearish, what did we see? We see BTC just what? Filling out this weekly gap right here, which also served as a resistance point from this zone. This zone that pushed price down, right? BTC broke out of it. Now that position is also what? Acting as support now to reject market to the upside. These are just reactions, nothing we are doing. We are just looking at how market reacted. Now let's observe also what market formed. This is how you read the market instead of this is basically how you read the market. Now you understand where BTC has been bouncing off. Now let's take note of the candles that BTC always form. This is weekly time frame. This will give you a proper direction of what BTC is doing. Now when we had a retracement from this region, look at this candle. We had a bearish candle on the weekly. Then we had the one that bounced off the support. He had it turning green, right? So a weekly, the first week recovered in price. The second week what formed, it's a weak candle. It's not really bullish, right? But it could not take the previous high. This was it. Let's mark out the previous high. All of a sudden, the third week took out the previous high. If you look at my status today, I posted that, we'll leave this week for the bears so that next week we'll get a all-time high. This is basically from what I've seen in the market. Okay, so nothing else. So the first week after the dump, the first week recovered. Second week formed something like it was a pump, but it closed not really bullishly. It was the third week that took out the high. This was when market filled this gap. Now look at what happened when market BTC filled this other gap. We had the red candle. Then the first week that we covered was bullish, right? Second week formed something like a doji, and the third week was what took out the highs. So you can, what market is just basic repetition. In fact, there will be no need of strategies, right? Strategies will not work if market does not repeat itself over and over again. It is how to identify, because that is how we formulate any strategy you are seeing. The SMC setup you are seeing is just all because of what we test in the past, that market reacts to it. So if the market is presenting that same reaction, we say, oh, I've seen it in the past. So there's a possibility market will repeat this same thing. Nothing else, right? Now what happened? Same move we have here. one red candle, one weak candle, a smaller one that could not take out the high, the third candle, which is the first week, second week, third week, we broke out from the highs. The same thing when BTC was retracing here. We had first week candle, second week candle, third week we broke out from the highs. Now BTC also had a retracement move here. This is our high, which is the current all-time high. Right? So we had the bearish week. The first week recovered. Second week, this which we just entered, this is 6 days. 6 days. So if we are to follow these patterns that BTC has formed in the past, this particular week might not give us a new all-time high, but the next week that will open, I expect that one to be what? Bullish, to take out this all-time high. That was the reason for my post. So this one now, if you look at this week, it opened and it has not even formed a lower shadow, a lower wick. You know, when a candle has a low, a high, a body, right? So this one has not formed. So there's a possibility that as this week opened, BTC can also form a lower wick like this on the weekly time frame, maybe closing out in the next 6 days with a doji. Then the next week, I'm expecting the market to what? Be bullish, to take out the previous high, right? Why am I doing these scenarios? These are possibilities. Why? Based on how market has reacted in the past. This was April, all the way from April. We saw these same candles, 1, 2, 3, bullish, 1, 2, 3, bullish. Now BTC has done the same thing. It's almost repeating the same thing, right? 1, 2, 3. So I'm expecting this week of BTC to maybe a range. So we might be trading inside a range, up, down, up, down. Then if the next week open, I'm expecting the market to repeat the same pattern. Is it a possibility? Yes. Can it change? Yes. Right? We do not know, but we have to be prepared for reactions that may be possible, so that if market reacts this way, we would see it. Okay? We would see it. Now, what are the other things we can use for confluence? Right? We can use for confluence trend lines. If I draw this weekly trend line now that has been bouncing off this region, if you notice that, you see that BTC has respected this particular trend line, right? Let me mark them. Let me go to the 4 hours, now the daily time frame, so that we can mark the trend line very neatly. So I'll delete this. This should be next week. So I'm expecting all-time high if BTC follows this direction. And if it happens, I'll come back to this video. I'll make reference of this video. So it's a possibility. Why? We study past action to see how price will react. As simple as that. Now, so that now if we have that, oh, there's a possibility price can do this. Now, when we go to lower time frames and we are seeing the noise there on lower time frames, our head is giving us, okay. If BTC is dumping now, it might be going to lower regions. It might be creating a lower wick for this week candle, right? It might want to create a lower wick like this for this week candle. So there's a possibility. Okay, there's a possibility that this week might not give us a all-time high based on how market has reacted. This is 1, this is 2, and the same pattern is forming here 3. Okay, so now let's look at, and we are done, and all these are based on resistance and support, right? Marking out key levels. We are done with that. Now, what is the other means we use to mark out, look for directional bias? Trend lines. Trend lines and key levels. That's what we use. Explained on day 4, day 3. I think so, right? If you don't understand it here, just go back and we watch the video. Simple as that. So let's go to the daily time frame so that we draw this bullish trend line. Now, mind you, when I was teaching trend line, I told you that you can have trend lines inside a trend line. You can have trend lines inside another trend line. Now, this is not even the overall bullish trend line of BTC coming all the way from lower time frame, but this is the current trend line. It has been following all the way from what? 74k region. Okay, so I just want to make that clear. So if you look at this trend line now, if you mark, now I've taught you guys how to mark trend lines, right? Trend lines are marked like this. If there is no, a lot of people don't know how to mark it. That's why they get confused. If you're in an uptrend, right, when market is creating series of higher highs, higher low, right, higher highs, higher low, higher highs, higher low, right? To draw a trend line, you must only mark the swing low, right? You must connect the swing low. What is a swing low? A swing low is the low that actually created a break of structure to the upside. For example, if this is my swing low, right? If this is my swing low, what's this thing? If this is my swing low, my for it to be my swing low now, right? It must have created a break of structure just like this. Now, if it does not, for example, if this one now, you have this movement and you have this low, something like this, right? Now, this one, if you look at this is what confuses most of people. Let's say you have a structure like this. Let me draw it better. Okay? You have market creating this. Just you learn something from this, right? This first broke structure, right, to the upside. Now, this second one did something like this and did not break structure, right? And market is maybe now coming down. Do you know what some people would do, right? Some people would draw this now and say this is the trend line. This is not the trend line. This is not a swing low. It did not break structure. This first one was the first touch. You are very, very correct. Right? You are very, very correct for marking it like this. Right? This first touch, for putting your first touch of the trend line here. But now you cannot say that this is your second touch on the trend line. Why? It has not broken structure. It did not break this structure. There was no break of structure here. So you cannot mark it as your second touch. So what people will do is they will now draw a line like this. So if market is coming down like this, they will say, oh, trend line don't break. You understand? They'll be like, no, the trend line has broken. This one don't break trend line. This, it don't break trend line. They'll be like, it's going down. It has broken trend line. Not knowing that this was not the second touch. What was market doing? Market was coming to lower regions where it can actually bounce off from, then go ahead to break structure. Now, what is the real trend line? This is now the real trend line. So you that was marking this place as trend line now, and you say trend line breakout, then you want to trade, you now say, oh, market is going to make a retest. That's what they will now say. When you draw a wrong trend line, then you see a break in your mind now, you see a breakout. Then if market is going back up, you'll be like, oh, this is a breakout and retest. Market has broken the bullish trend line. It wants to retest. You enter short, then it take you out. You shout, pour me water. You understand? It will take you out. Meanwhile, markets are just created a swing low and a swing high, wherever this is now what? Your trend line. So this is how people miss it. If you see the market does something like this and you mark it at trend line, it means you don't really have a trend line yet. Till you have two swing high, two breaks. It must be two touch. So if this low you pick must make a break of structure first, then when the second low make a break of structure, then you now have a trend line. So any other one coming for the third, you can now trade it. But if you don't have 1, 2 like this and you are drawing trend line, you are drawing nonsense. Right? It's now the third touch that you can now trade off from. So if market is now coming down here, I'll now know that, oh, why? Because market has bounced off this region twice. Okay, let me delete this. I don't want this video to be too long. I've not even done the analysis. So you have this now. So if market is now coming back third time, you now have confidence to take your trade off this region. And once it bounces, be assured that there is always a possibility that market will take it out, especially third touch. When it's getting to the fourth, fifth touch, is now the trend line becomes weak. I've done this example on trend line videos. Many of you did not watch it. You don't know it's actually important. You saw trend lines. You were very interested in SMC. You don't know that trend line is major. It's a major stuff, right? So this is how people mislead themselves on trend line. They do it like this. They'll be waiting for a test when this did not actually break the structure. So if you look at this, right now on the daily time frame, if you look at this, why is this place a trend line, right? When market was making this swing low, look at the break here. This is the first break of structure, right? I'm not going to even consider this trend line as anything till I see a second touch, right? Till I see a second touch. Now, when there was a second touch, so at this point now, when this has not formed, because when market made this break of structure, this was the low that market shifted till it broke structure, which was the previous high, right? You have a swing low, a high, a low, a new high, body close above. Now, what happened? Market made a new high here, and this was the second break of structure. So now, since I have a low that broke structure to the upside, and I have another previous low that broke structure, I can mark the two as a trend line. So if I connect these two together, right? If I connect these two together, I have, let's make it very clean so you guys will get it. If I connect these two together now, I have what? A trend line. Based on why this first low took out structure 1, this second low took out the previous high 2, it made another swing high. So if price is coming back here and actually touch the trend line, if you look at it, there's a beautiful tap on the trend line and it's bouncing up, I'll be expecting market to take out this other high. What's that? Okay, this other high, right? So I'll be expecting market to give me a new swing high so that it will now be 3 touch, because for me now this trend line is not weak. Market has already just created 1, 2, the third. It is now from the 4th tap or a 5th touch that the trend line becomes weak and can be broken based on technical analysis, right? Several times the price has been reacting. So now we have a beautiful third touch on this. So what am I expecting? I'm expecting market to create a new high. Since that's bounced off this trend line that's been pushing market higher, I'm expecting to create what? A new high. Okay, so this is another confluence now that matches the candles we saw on the weekly time frame that say, okay, market goes up, come down, and do all those reactions. Okay, but what people don't know is they expect market to move in a straight line, but market does not move like that. When market tapped this trend line and made a bullish move to the upside, it still made a form of retracement, pumped up, ranged before breaking. It tapped here. You can see the order flow we have been moving, right? You can see the order flow market has been moving. So there might be a form of retracement into lower regions or into even inner trend lines, right? Because market always creates inner trend lines. When market was moving bullishly here, there was an inner trend line that it was following, right? Once it got broken, it came to this trend line. Same thing here. There was an internal trend line market was following, right? Once it broke this internal trend line, it came back to this one. So who knows if market is actually creating another form of internal trend line here. If it breaks it, then it comes to the lower region. This is just a confluence. So I believe you guys have learned. Those of you who don't know how to draw trend lines, you must have learned 1 or 2 from this. So let me take this out. Alright, let me take this out. Aha, beautiful. I don't think we need all this. I don't even need the trend line again. Once you have the direction has saved in your head, you don't need much again, right? So these are something you can now look at, right, to catch confluence. Remember also, when we are the 4 hours time frame, when we now, let's go to analysis time frame. Now we have done directional bias time frame, which is from the monthly, the weekly, the daily, right? So now we look for analysis time frame, basically 4 hours and 1 hour time frame. Okay, so remember when I was talking about BTC, I said I taught you guys imbalance that can be used as a point of interest, which is the first touch we had here and the second touch of imbalance we had here, right? And you guys saw that a lot of people that was waiting for BTC to come to this order block, it did not get there, right? It just bounced off the imbalance and you can see it as taking out this previous high, right? Of course, there was a resistance here which has slowed down the impulsive move of the market, right? Which has slowed down the impulsive move. And if you have been following me, you bet that you are catching some setups, some buy setups. So what do we look out for? in the market. Since we know we are bullish and market has actually bounced off from a beautiful region here, if you go, why Smartech, why do you feel that as market bounce off from this place it will just keep going higher? Right, some people are marking lines that is coming to 100 what are you seeing at 110k, that market has filled all the gaps. Why do you think so? Because market has reacted this way in the past before. Look at this region, right? This region here, hope I'm not talking too fast. This was the first imbalance market triggered. We saw a bullish movement. It couldn't give us a all-time high. Then market all of a sudden what? We traced back into the second imbalance. What happened? It went all the way to the top, then sold drastically. Everybody was shouting, "We are going to hell," right? Then all of a sudden, boom, broke all-time high. Repeating the same thing here again. Boom, broke, possibility from all-time high. So where are you now going to be looking for buys? For me, I'm going to be looking to catch buys on BTC. I'll allow the market to cool off. If it's retracing, I don't want to go for short. Why? You will get manipulated, right? In the next video tomorrow, I will show you something special about sessions. If you notice my tweet today, I made a tweet about sessions. I'll show you guys something special about sessions that you can use. So all I just need to do now is to sit out this market. I may not take any sell trades, but I'll be looking for regions where if market is selling, where market would likely come to, so that I can catch a beautiful buy. You understand? Since I'm also on this trade right here, you know, we have entered the market all the way from 112k. Okay, so this is massive profit so far, massive profit. If I post that profit, no Allah. Okay, so what do we do now? You say Smartech, how do we now catch the trades? How do we now go? You now be looking at swing high and swing low. Remember what I taught you guys about this thing is sweet. What I taught you guys about what's it called? I told you how to use the Fibonacci retracement levels now. If you don't understand what I'm talking about, just go to the Fibonacci retracement levels. Market does not move in a straight line. Even on the 4 hours time frame, you get to see market moving like this. Buy, where is this shit? Buy, sell, buy, sell, buy, sell, buy, sell. So what's market doing? It will buy. When it gets to a premium, it will sell. When it gets to a discount, it will buy. It gets to a premium, it will sell. Discount, it buys. Right? That's what market is doing. So how can you catch trades beautifully? Let's look at the swing high and the swing low that market has been creating on the 4 hours time frame. There was a low, a high, a low. Swing low, swing high. Market retraced. If you use Fibonacci, you will see it. It retraced into what? Discounts. 50% level, then bought again, right? Created another low, high here, low, swing. It retraced 50% bought, created low, high, then pumped. So if I look at this now, this was my previous, this is what market did here. This was the high, then it did a low, then there was a pump to the upside, which is this, right? Most time if you don't know how to do analysis, just follow the diagram like this, bring it out in a diagram format so you get it. Market was pumping from here. This was the low market did, which is this, equivalent to this low. You can see I'm following the same line, so it give me the same measurement. So at the high that market has, which is a supply zone here that sold market all the way, you know, this high was a pressure was coming. So you don't expect market because it wants to break all time high, it just goes there. There are still others here that will push market down, right? But if the buy momentum is stronger, then of course market will be buying. So now this is the swing low and swing high market has done. If I want to pick my Fibonacci retracement tool to know, right? If you say you want to sell the market, fine, you can sell if you see a good setup, but just know that it might be highly manipulative. This is where a lot of people will be losing money hitting SLs on lower time frame. Why? Because there'll be too much noise. But if you zoom out and see the higher time frame, you know when to sit out and say, oh boy, I'll just be watching this market since I'm in a buy already, or even though you're not in a buy, because any buy you catch from these levels, a market actually pumps. You will hold the trade to about 130k. You're gonna make money. We're going higher. So what do you want to do? You'll be like, okay, this is swing low and the swing high. I hope this video is not long. I don't know. So you mark your Fibonacci retracement tool. Boom. It's the same thing. No, look at this. It's the same thing. This is swing. I did the measurement just to bring it out. This was the high, still same place. This was the low, so same place, right? Using the same tool. Let me push it. Okay, same tool. Okay, so if this is low and high, it means 50% level is here, right? So if BTC is dancing around all 119k, 122k, you have no business buying. So you're more interested from the 50% level. So let's mark out the 50% region. So if we draw an horizontal line here, it means this is the low. So let's delete this. Let's take this out, and let's bring this out. So let's mark our swing high. If this is our swing high, 122 region, beautiful. And this our swing low. Our swing low now is 115k, right? 150,800. This was the low market created before pumping up. So we have no business looking for buy setups here on BTC inside this range, but we can actually look for buy setup here, right? But we cannot take our trade like this now. We cannot say we long BTC from 50%, put stop loss below here. Come on, this would be so this would be a winger mode. This would be a winger mode. So we don't want to do this, right? We want to now use SMC to catch precise, yeah, catch that precise direction of where the market is it's actually heading to. Okay, so we want to look for good regions where BTC might be buying from. So this is where we'll mark at, okay, these are 50% region. Anything below, anything above here, we have no business. So we want to see if BTC retrace into these regions, right? And there is a form of support that will take BTC back up. That's what we are looking at, right? And you would also see beautiful, beautiful setups on altcoins. For those of you who love trading altcoins, you would see beautiful setups there. I don't know, for some reason I don't know how to, that's actually my weakness in trading. I don't know how to look for different pairs. Once I see one, two, I'm okay. That's my problem. I don't know how to do that. That's why even to open a signal group is quite difficult for me, because if I open a signal group now, it will be so much headache for me to be going to analyze different pairs. So I might not be even dropping signals early. You just be seeing BTC, one BTC trade, one gold. So it's kind of boring the way I trade. Okay, so that's it. So now what do I want to look at? Remember what we taught you. Since this is the 50% region, let's look at other things like resistance and support levels where market has been bouncing off and on from. Maybe we can see something. And of course, this is a 4-hour time frame. And if you look at this very well, there are some levels of imbalances we can also pinpoint for internal range liquidity, just for identification, right? We can pinpoint this level, internal range liquidity. We can also use this level to map out a zone of resistance and support, right? Market bouncing off here, buying from here, buying from here, buying from here, buying from here, and sold from here. Then we see a breakout, retest of this region, and a buy, right? So there's a possibility of market we coming back to these levels. So we want to market something like this. So what I want to even do, let me go back to the daily time frame. Okay, it's even corresponding, right? It's corresponding to that daily time frame shit. So what I want to do is even look for, if we even remove support and resistance, right? And say let's pick the last candle, the last 4-hour candle before the bullish move for our order block, it will give us a beautiful region around this 17k. So if we drag this out, it will also give us a beautiful region around 17,500, right? 117,600. So this is the complete order flow block to use. Market pumped, right? Then sold. Then we see a pump. So the last candle where the market sold, all the way from where it stopped selling, then when it start pumping to the upside. So this is my point of interest, even inside this 50% level. This is where I'll be looking for market to come during this week. So we have Monday, today is Monday, so Tuesday, I don't know what market will be doing Tuesday. I don't know if market is just going to dump here drastically or market will begin to range. Of course, there's high possibility that market can start ranging, because this dump has also given us a certain form of imbalance right here. Okay, certain form of imbalance right here. So there might be a possibility of markets just bouncing off, ranging, or buys from here even before the 50% level range. So you want to be careful with so many manipulations that will be on the smaller time frame. So if I were you, I would wait. Let's see how this week ends. So I'm sitting out on BTC trades on selling. So I want to wait for BTC to come to a point of interest around this region. And there's also another thing to note. I think that would be the last thing. Look for the regions where there might be a CME gap, right? So market must have created a CME gap within this 50% region, right? Because the market closed on Sunday and bullishly it went up. So Friday close, between Friday close and Friday, okay, Friday is here. So look at where Friday closed, right? Friday candle closed here. So there should be a CME gap around this region. So we'll talk about that on the other video. This video is too long, guys. So basically, this is it. So if you don't really understand, we watch the video or go to past videos where I talk about directional bias and all. So this is what I'm looking out for. So thank you very much. I had to just end this video because it's getting too long. I'll see you guys tomorrow, guys.